Hi, welcome back to my channel. Today I want to talk about technical chart analysis, a very complementary but somewhat esoteric skill set, but complementary nonetheless to fundamental analysis. Technical analysis is primarily concerned not at all with the fundamentals of the company, meaning to say the cash flow, the gross margin, the growth rate, the margin expansion, the earnings per share, the price to book, the enterprise value, market cap. In general, these are not the inputs that a technical technician, a technical analyst, chart analyst would be looking at. Technical analysis is almost exclusively the domain of studying charts and price movements. And there's a lot that goes into that. It's not just the price trend itself. You also have things like volume. You have things like the open and close price. So there's quite a lot that goes into it. I have to say though, once again, while I very much appreciate you coming to uh, listen to my discussion here today and to see the product that I'm demonstrating for you guys. I'm not offering any securities for sale. I'm not a financial advisor. I'm not a chartered market technician. I'm I'm first and foremost a technologist who has just a tremendous passion for building products that can hopefully solve problems in the real world and make a difference to people in a positive way. And I'm very open in sharing my lessons that I've learned along the way. And I'm thrilled that you're here. And so please don't take what I say as um, don't take it to mean that this is any recommendation to buy or sell a security. I'm not soliciting anything here. I'm purely providing this information for entertainment and educational purposes. So let me just say that from the outset. Uh, but again, I want to thank you for being here. So let's dive into it. What do we mean when we talk about technical chart analysis? The cool thing about our platform here is that we are actually building something that can support both fundamental and technical analysis. So in the fundamental analysis view, you're going to get a snapshot of what the company does, the products and services that it provides, its cash flows, its net income, its revenue, its market cap, some of the most important financial metrics and ratios, just to help you get a good sense on a comparative basis between making a decision around which stock to choose when presented with a multiplicity of options, right? A multitude of options, and there are thousands and thousands of options to choose from. So the fundamental view is really designed to kind of give you, at a glance, some of the most pertinent and key information that you'll need to do a quick assessment fundamentally. And in addition to that, we do obviously recognize that price trends and momentum play a huge factor in the perception of a company, and how it's almost like physics. The momentum is almost a self-fulfilling thing, where the better a company does, the more momentum it gains, the more opportunities that open up to it, and if it can capitalize on those opportunities, then it can continue to gain share and outperform. Whereas companies that tend to be stalling, stagnating, find themselves at a crossroads, really require bold leadership to, sort of right the ship and break out of that phase that they're in. So that's kind of a long-winded way of saying that fundamentals definitely matter, and we discussed that in the last video. But this one is about technicals. So technicals, we're really looking at the charts. We're really looking at the trends and the information that the price trend tells us. And it does tell a story because as we know, the market is made up of participants, buyers and sellers. And of course you have market makers and liquidity providers and regulators. There's actually a lot of other constituents in the overall market. But fundamentally, it can be really boiled down to buyers and sellers, supply and demand. The sellers are the supply, they have the stock, the shares, and the buyers are the ones that want to buy the stock. And so for when the price goes up on a stock, it's because there's more buyers than sellers. So that's known as a bullish, a sort of bullish sentiment. Bullish as in bulls being the people who are optimistic about the stock market and kind of envision that the stock will, or the market will, increase in value in the short, medium, and long term. Bears, the bearish view is the opposite. They're thinking that the stocks may be overvalued and the price will drop. So you've got this tension between the bulls and the bears, the buyers and the sellers, and that is what drives the price. The companies themselves do not dictate the price. They can, they can issue shares in an initial public offering when they first go public. But after that, those shares that are outstanding, they trade on the open market. So they trade between other market participants. The stock price that you see for an individual share in a company is not at all controlled by the company. Fifth Third Bank Corp is trading right now at $37.42 for a share. They don't set that price. The market dictates that price. GE is selling or trading at $165.14. They don't set that price. The market sets that price. And that price is dynamic. It changes all the time. And you have to, there's so much activity that happens every second that the market is open that the price is quite a dynamic thing. It is a moving object. But typically they trade within a range. So when you are buying and selling, you're most of the time you're getting the fair value price. But there are cases where, depending on the time delay between the time that you place the order and the time that it gets fulfilled, there can be some movements between that time. So it is a complex system, but for the most part, it's quite efficient. That's kind of a roundabout way of saying that the price is very much a moving target, and it is dynamic. So there are people who focus almost entirely on just studying the price movements, studying the volume, the price, the amount of buyers and sellers, the direction of the stock, looking at things like seasonality impacts, looking at things at trading around corporate events, like earnings releases or new product launches, getting out ahead of certain things. Not really front running, but sort of positioning ahead of what they feel the market would react to. You hear often people talk about, buying the rumor and selling the news, because the market reacts so fast that by the time you read about something officially, right, there are people who've already been trading on just the rumor of it. Wow, look at this. Hartford Financial Services Group. That is a very interesting price trend. This price trend illustrates essentially a mostly linear, sort of flattish, but still growing price trend, and then an inflection point where the buying pressure really accelerated over some period of time. There was a bit of a sell-off, a kind of a correction a bit, and then it traded within a range, and now that company is potentially breaking out again. Who knows? We'll get into that a little bit more. In this case, you see here International Flowers and Fragrances. You're seeing kind of a step function downwards. So you're kind of seeing a period of time where it could be maybe about a month or two where it's trading roughly in a range, and then there's a sell-off lower. It's a step function lower. Then it's trading within a range, and then it step functions down a little bit lower. Then it trades within a range, and then slowly accelerating. And you ask yourself, what are the drivers to that kind of behavior? Then you think about it, well, if it's a flowers company, I'm just assuming based on the name and the category that it trades within, specialty chemicals, materials, international flavors and fragrances, not flowers. Sorry about that. Flavors. Um, this could very much be something around sales cycle or seasonality, right? There could be something where certain seasons or certain flavors are in vogue in certain seasons and fragrances and so forth. So who knows, really? I mean, that we'd have to really dive deeper into that company to kind of understand. But this is just giving you a look at a whole bunch of different companies here, their stock price. And that's the cool thing about this platform, is that in addition to helping you construct diversified portfolios across multiple sectors consisting of multiple different companies, and also helping you allocate and rebalance according to different strategies, you can also use this in some way to help you with your technical analysis. It's not our main focus. I have to, be upfront about that. It's not really what we're doing. This is mostly a portfolio management tool focused on modern portfolio theory, but there's a definite part of market dynamics which is dedicated to technical analysis, and that's what I want to talk to you guys about today. So the first thing to do is think about what is a good candidate for a company which would fall under the category of maybe a more of a trade kind of a stock rather than an investment stock. Now that's kind of it's a bit of a subjective thing, because oftentimes the companies that are highly traded can also be good investments, but for different reasons. Let me give you a more clear example of that. So let's generate a portfolio of FMCG, fast moving consumer goods, stocks, and QSR companies. So these are your quick service restaurants and FMCG or consumer packaged goods stocks, right? So these are going to be the things you buy at grocery stores, and these are going to be restaurants that you would eat at. Very much exposed to the consumer, kind of somewhat cyclical in nature, because they do have their cyclicality. They have their high seasons and low seasons, so to speak. There are times where people stock up on certain brands or certain types of products, and then there are times when people eat out more. There are times when maybe they cook at home. And here I'm thinking along the lines of, think about a calendar year has mostly these 4 quarters and these different seasons, right? You have spring, summer, autumn, winter. And it could be that in the winter months, certain restaurants or certain brands perform differently than in the summer or spring months, for example, right? Let's think of another, I think there's a company called Pool, for example. So if you're a pool company, right, you are let's search for Pool. That's probably a company that does decently well during, let's see, where's Pool? Here it is. Let's add Pool to the portfolio. So, Pool is a company that it focuses on pool surfaces, decking materials, tiles, hardscapes, natural stones for pool installations and remodeling. Probably does some of the pool maintenance, looks like pool equipment, cleaners, filters, heaters, pumps, lights. So they probably have some exposure to things like jacuzzis, which I guess could be kind of year-round, or maybe they do better in the winter months. But obviously that pools are things that you associate with summer in the heat, right? So if you look at their chart, you already see this sort of volatility, right? And actually, if you look at all these charts, this kind of a portfolio, where you're looking at staples, consumer discretionary, and in some sense the industrials, but it's quite consumer oriented. You're looking at a bunch of stocks here, which are, for the most part, quite volatile, right? And you can right away see some pretty clear patterns. Let's just scroll through that, and you can start to see that there's different categories of companies, right? Coca-Cola, Mondelez, McDonald's, Kraft Heinz, right? These are very much your food-oriented companies. Some of them are selling direct to customers, like in McDonald's, and some brands sell to retail outlets, like Coca-Cola. Coca-Cola doesn't necessarily sell you the product directly. They sell it to the restaurants, and the restaurants offer it as part of their menu. For example, Coca-Cola does sell their products in bottles, but for the most part, they sell those bottles or those cans directly to the retailer, not to you individually. So the retailer buys it and then distributes it or sells it to the end consumer. So these are examples of food companies, and you can see that they have volatility, right? And they probably have, some of these probably pay a dividend, and they're all very good companies. I mean, Coca-Cola is 272 billion market cap, McDonald's 188, Mondelez 93, Kraft Heinz, you've got Procter & Gamble, PepsiCo. I mean, these are your classic consumer packaged goods companies, as well as some of their supply partners like McDonald's and Pepsi, and RBI brands, right? Unilever, Yum Brands. So these are examples of companies that the stock price is going to look choppy like this. It's going to look like a mountain range. It's these kind of, they are consistent players. I mean, they're consistent performers in the market, but it comes with some level of volatility, right? So you're not going to get that sort of exponential growth that you see in an Nvidia or a Broadcom or some of the chip companies, which are more of a secular growth story. These are your staples and discretionaries, so they're going to have their ups and downs. They're going to have their cycles, and that's totally normal. That's fine, right? That's expected. So that's what explains why you see this kind of up and down movement for these big companies that are, very dominant, very well known, but they don't grow. They don't have this super high growth rate like the hyperscalers do, for example, right? Like Google's and Amazon and Meta and Nvidia or Microsoft, right? They don't have these huge growth sectors that are all of a sudden people are buying their products and building businesses around them, right? These are your consumer companies. So that's why you see these sort of chart patterns. And within those chart patterns, if you really zoom in, you might be able to uncover certain formations, right? So let's look at Coca-Cola, and you can see that there was a clear low last year around October-ish. And then from that point, the company has rebounded. But along the way, you're getting a lot of these sort of ups and downs, which are sort of, textbook for this kind of company, right? And even though this company is essentially flat-ish on a 1 year basis, or sorry, on a year-to-date basis and on a total range basis, it's not grown very much beyond that 58 to 62 price range. I mean, right now it's trading at just under $63. It started out in the beginning of 2023 at 61. So you're not holding this company expecting to gain a lot of yield or appreciation in the stock price itself. What you're doing is you're holding it because it's somewhat defensive. It is such a big company with so much distribution channels, so much sales, that it can actually provide a dividend, which is essentially a form of income stream back to its shareholders. So if you hold a share of this company, you're getting a yield. You might not, the stock price might not change that much, but typically with companies that have this kind of a profile, they do offer a dividend. So they have limited ways in which they can actually invest their capital and they find that their position in the market within a portfolio is best served as a dividend company. So they provide essentially a portion of their income back to shareholders. And as you can see here, this is the quarterly revenue of Coca-Cola. You can see that in probably the second or third quarters of the year, it does pretty well, and then the third or the first and fourth, second and third quarter, and then the fourth and first, or first and fourth, a little bit less. And that was true for 2023, and it's probably true for 2024, right? If we look at the cash flows, we also see this kind of a trend as well, wherein the beginning quarter might have, they might be making negative cash flow or just a little bit of break even there, or a little bit of positive cash flow, I should say. But then, if things tend to work out as according to history, they'll start ramping their cash flow in the middle years, and then towards the end, probably they're spending a lot of their cash flow in other areas, right? But at the same time, if you notice their revenue trend over the years, it's pretty steady. So it's a steady Eddie company. This is it's a well-known company that provides a dividend, and traders have an opportunity to make some money, not necessarily buying and holding the stock if they're not interested in the dividend yield, but trading these peaks and valleys. Okay, so let's talk a little bit about how these peaks and valleys work. Again, I'm not a market technician, so I like to focus on the fundamentals and more broadly on a diversified portfolio. Right, I'm not really the person who will sit there and make lots of trades because I rather spend my time building software and building companies and that kind of thing. And trading can be, being a day trader, that can be almost like a full-time job. And it takes a lot of practice to get good at that. And honestly, I haven't really done that much. So that's not really my forte. That said, I'm interested in understanding how it works. And I do understand that it does impact markets, and it is a dynamic. So let's use an example of a company or a security, an asset that is not based on any fundamentals, right? In this case, we're talking about a commodity. So a commodity in this case is orange juice, and what I've done here is I've got the orange juice futures. So the futures are a contract that you can buy. So you can pre-purchase or lock in the price of orange juice commodity in the future. So let's say you want to buy from the farms. You are a company that uses orange juice in your product, in your menus, and you need to secure a certain amount of supply, and you want to lock in a certain price for that. There is a market for you to essentially buy a future stake in the output of those farmers, right? In the output of those of that produce, of that commodity. And so you can trade all kinds of different commodities. You can trade coffee beans, you can trade orange juice, you can trade metals, silver, gold, oil. There are so many different commodities that are not a stock of an individual company, but you are essentially trading a fungible commodity, right? So I can, this, for the most part, oranges have, there are certain types of oranges that you use for orange juice, different varieties that you use for orange juice, and they're mostly fungible. So I can take a bushel of oranges and swap it with a different bushel of oranges, and I still have, either way, it's the same thing, fungible in that sense, right? I can trade $10, $1 bills for a $10 bill. It's fungible. I can swap those in and out, no issues there, right? So these are fungible commodity prices, and there are commodity markets that actually allow you to trade these contracts, right? So you're not buying shares, you're buying contracts, and these are option contracts on the future price. So you are essentially locking in the ability to buy these products at a fixed price. And the reason why this can be valuable is because the price can go up all of a sudden there can be a supply shock or a huge shortage. There could be a weather event, or there could be a huge orange grove that normally produces 100 tons of oranges, and for some reason the they are producing less for some reason. Let's say there was some bug infestation, or there was a colder weather, or not enough sunny days, whatever reason is, the supply is now less, and that causes the price to go up for the remaining stock that is available. So if you're trying to hedge against that, you can buy these futures contracts. And I wanted to use this as an example of technical analysis because then there is no fundamentals to worry about. There's no company here, there's no cash flows, there's no profits, right? This is just the oranges themselves, or the orange juice product, right? So that's what we see here in terms of this is a chart. Now, what do we mean when we talk about technical analysis? Well, essentially what we're doing is we're trying to study these chart movements and look for patterns or look for formations, right? So let me try to illustrate what that could look like here. So let's start annotating this chart. What I'm going to do is I'm going to grab some of my illustration tools here, and I'm going to show some very basic technical chart analysis. First thing we're doing is we're going to draw this linear line to signify an upward trend of the price starting from 1 year ago. So this is a 12-month look. So this is a price as of 2023, June 1st, and today is June 2nd. So this is a 1-year view of that. And what we can see here is that orange juice price starting from June of last year through towards most of the end of 2023 was on a pretty rapid trend upwards, right? So this line here is the end of 2023. This is December. And for most of that time period, it was trending up. But let's draw the line here. I use green here because I'm showing the support level. The support level means that the price drops but doesn't fall below that. And it tends to have this sort of pattern, right? On the other side, we're going to draw the resistance line. The resistance is where we see the price not really breaching above that too much, right? And so this is the high point of the price, or the maximum that people are willing to spend for a futures contract. And you can see it is traded within this range or this channel for most of that time period, right? So that's the first thing we'll notice when we're doing some technical analysis, is we're looking for the very clear and obvious trends and formations. Next thing we'll notice is that there was also a sort of a correction, I guess you could say, wherein the price sold off after December-ish through to the end of January. So between June through looks like the start of November, the price was pretty much trending up. Then you have this kind of this one's kind of confusing. This one could be a double top or double bottom. I think it's a double top. It's not quite a head and shoulders because the head would have had to have been higher than the shoulders, but it could be a head and shoulders if you use this as the head and these as the two shoulders. This is a very kind of confusing formation, so hopefully AI can help us with that. But let me do this first. There's some things we can clearly identify. So we've got these two trading ranges or channels. Let's call that. And then in this year, in 2024, once we reached February, the price sort of rebounded, and we've got a higher price relative to where the low point, or the local minima, right? So these are local maxima, local minima, local within a predefined range, and then the maxima is the high point, and the minimum is the low point. So these are your peaks and valleys. The price kind of rises again. And then you can start to see this sort of consolidation where it starts to, you still see the volatility, but it starts to tighten a bit. And then you get to a sort of a point at which it consolidates. So let's see. It'd be easier if I just copy and paste this line. And again, I'm not a professional in this, so I'm just, reading some articles, understanding the basics of it. And then you see, again, another huge, or another big spike up, right? So this kind of breakout. And I think that is one of the things that could happen, is that when you see this sort of consolidation, that might be portending, or that might be telling traders that there could be a bullish, I guess, reversal, or a breakout, right? So I guess you look at this as I guess you can call this like a double top, maybe, possibly, but that's what I see so far. So let me do this. Let me ask the AI to identify the pattern within this. We'll call it a purple circle. I might need help from the AI to help me understand what is that. What is that this formation that we see here? Right, so now I've got a chatbot here where I can actually ask. So here's the cool thing about the new multimodal model from OpenAI, is that the GPT-4o has, through a single API, multimodality, meaning you can talk to it in text, you can talk to it in images, you can talk to it in video and in voice. Well, video is more like you're taking screenshots of the videos. It's not actually analyzing the exact video. But the multimodality makes it so that the chatbot is it can take far more inputs and can really understand it. So what I've done is I've actually taken that screenshot, which I've actually drawn, and I'm asking it to analyze this from a technical chart analysis. So let's see what it says. The chart displays a series of price movements with several distinct patterns and trend lines. So there's an ascending channel, the left section, which I'm assuming is what we discussed here earlier. This is the uptrend. There's a head and shoulders pattern circled in purple. The circled area shows a potential head and shoulders pattern, which is typically a bearish reversal pattern. The left shoulder, head, and right shoulder are visible, suggesting a possible trend reversal. After the head and shoulders pattern, the price breaks below the neckline, confirming the bearish reversal. So I guess technically this was a head and shoulders pattern, wherein maybe this is the neckline here, I'm guessing. And then the bearish reversal means the price is going to be dropping, right? So you're seeing the price fall. Now these are prices. The interesting about this, these are futures prices. So the traders are assuming that for the next few months, the price of orange juice futures contracts, which look out ahead a few months, will be correcting a bit. And then currently we're seeing the price of orange juice contracts at the highest point ever. So it could be that orange juice is very popular right now, and that there's a huge demand. It could mean that there's just a supply shortage. It could be both. But that is not really what technical analysis is looking for. Their technical analysis is just looking to see how other traders playing the options market are reacting, and where the price equilibrium is, where we are arriving to a price equilibrium. Then it says that there's a descending channel, the middle section. Then there's a symmetrical triangle. Forms a symmetrical triangle with converging green and red resistance lines, trend lines. The pattern indicates a period of consolidation where the price is making lower highs and higher lows. So we've got lower highs, and higher lows. right? That's your support line, which is trending upwards, and your resistance line, which is trending downwards. Now, again, this is after the fact, so we have the full knowledge of how this price trend played out, and now we can go back and see like, oh, okay, this is how we can make those calls. We can say like, yes, these were the channels, these were the formations, this was the pattern. But at the time where we are right now, right, we don't really know what the future holds. I mean, we have to make our forecast. We have to, we have to present a variety of different, potential outcomes, different scenarios, and try to play, those odds and try to guess, or I guess predict where the price is going to be moving. We'll have to have a thesis, and part of what helps drive that thesis is the price trends and how these patterns work, and knowing that once you start to see a pattern, you have the knowledge that other traders who are also looking at patterns would probably see the same thing. So it kind of tells a story. It's kind of presenting a signal as well. So there's some information in these formations and in these patterns. The chart shows an initial strong uptrend followed by a bearish reversal indicated by a head and shoulders pattern. After the reversal, the price enters a downtrend within a descending channel. The price then consolidates within a symmetrical triangle before breaking out to the upside, resuming the uptrend. The current trend is bullish, as indicated by the breakout in the steep upward movement marked by the yellow trend line. Now again, I made these markings, so I could have asked the model to just analyze the chart without these markings. I could have even asked the model to draw these lines for me as well, as best as it could. But I think by combining the human element, which we're really good at recognizing patterns. That's part of what makes humans a very kind of, advanced species on this planet, is because we have this innate ability for pattern recognition. We can pick up on trends and patterns very quickly. And that's actually how we learn. That's how our brains have evolved. So we're really good at that. We can see the big picture and we can instantly start looking for patterns and formations. And sometimes we're seeing things that aren't really there, but oftentimes we can pick up on these patterns. And so if you can combine, your knowledge, your experience with AI, you can really become a formidable team, I think. So the trading strategy, as the AI suggests here, is that for long positions, consider entering a long position on pullbacks to the yellow trend line with a stop loss below the trend line to manage risk. So basically it's saying if the price is entering any of these positions around this trend line, if the price drops to around this line point along this trend, consider entering into the stock. And if it goes too far beyond that line, if it goes down too far, have a rule that says I'm not going to buy anymore, at that point, or you have a stop. You stop your losses if you're holding for too long, for example. So that's there. For short positions, be cautious with short positions, as the current trend is bullish. Consider shorting only if there is a clear reversal sign or breakdown below the yellow trend line. Right? Always combine technical analysis with other factors such as fundamental analysis and market sentiment for a comprehensive trading strategy. So that is the advice that our chatbot. Remember, we did the fundamental analysis with RAG last week, and now we're doing technical analysis using the vision modality of GPT-4. And so you can imagine that if I wanted to look at any of these charts in my portfolio, right? If I wanted to just do some technical analysis, if I found a chart that I thought, oh, there could be an interesting pattern in here, what is the pattern that I should be looking for? I could go into that company, look at that price chart, right? Take a screenshot of that, go into my app, grab that screenshot, ask it to analyze that chart, and what I'm doing is I'm actually translating that image into a format that the large language model can understand, and it is analyzing the data in that chart, and it's going to come back to me with its impression. It doesn't know what price that is. It doesn't know what stock that is, because that was not information shared in the chart. All you see is you see the stock price, but you don't see the stock ticker. So the model doesn't know which security or asset is being traded here. It's only looking at it from the time range that we have shared with it, and it's saying that it sees in its observation that you have these trend analysis. You're seeing initial phase, a mid phase, a late phase. You're seeing key observations like support levels around 115, around 125. Let's look. 115 and 125. So here's 115 there. Yep, that's correct. That's the support level. It never dropped below that. And other points along the line, 125 was another key support level. So that looks pretty accurate to me. Resistance around 140, 145. The price peaked around this level multiple times, indicating a strong resistance level. And then obviously there's significant volatility with multiple peaks and troughs, indicating a highly volatile instrument, right? So it doesn't know this is Coca-Cola. It's just looking at the stock trend, which is part of what technical analysis is concerned with. It doesn't really need to know exactly what the underlying fundamentals are of the company. It's just looking at the trends. Resistance level of 140, 145. Sorry, I need to go back to this one. Okay, 140, yep, here, and then 145 almost there. Yeah, that's correct. So between this higher range, 140 and 145, the stock price is not breaking out over of that range. So this is your resistance level. So if you're looking to enter the position right now, there could be some room to the upside that you can gain, but you're also looking at potential risk of reversal where it could go, the price could fall like it did here, right? This was the same time last year. This was beginning-ish of June where it traded up during the summer months, and then as we got into August and into September, October, the low, then it bounces back, and then it's been steadily going upwards until we are where we are today. So that's a very interesting insight. It's mentioning several patterns like double bottom, head and shoulders, and then it says, you know, that there could be a moving average and relative strength. If we added those to our chart, that might give it some more information for it to analyze. But it gives you a nice conclusion. And so if you take this as part of your assistant with your fundamental analysis, you could start putting together pretty interesting portfolio strategy using our platform. You've got your fundamentals. You can look at the cash flows. You can look at the income. You can look at the revenue growth, right? You can see the price trend over time. You can add it into a portfolio and see how it looks within the context of a broader portfolio, right? You can even, with our platform, you can even create a lookalike portfolio where you're taking the existing components in this portfolio and then asking it to do similarity search. So it's looking for companies that share very similar characteristics to the existing companies in this portfolio. There's 11 in there currently, and it's pulling up. So this is Coca-Cola, Mexico's Coca-Cola, which is another huge company. It pretty much has the license for license for Coca-Cola in Mexico, which I guess they love they love Coca-Cola as well. You got Chipotle, you have Monster, you have Dr. Pepper. In terms of the consumer side, like Procter & Gamble and Unilever, you're getting Estee Lauder, Hershey's, Fastenal in the industrial side, Kenvue. This is perfect. So you could create multiple, like, sort of not even clones, but like derivative portfolios, or kind of like inspired by portfolios using this platform. So this is a really, really, really cool tool, and hopefully this becomes your go-to place for expressing ideas, learning about the markets, constructing portfolios, and becoming a better investor. So I want to thank you guys again for coming to my channel, watching the video. Please don't be shy, leave a comment, You can request anything if you'd like for me to talk about. And also, good news, you will be able to try this platform on your own, by yourself. The platform will be going live this coming week. So by the time you listen to this video or watch this video, there's only going to be a few more days before after this video goes live. You'll be able to actually try this platform by yourself for free, guys. That's an amazing tool, and it is our pleasure and it is our great honor to be able to provide this platform for you guys, powered by state-of-the-art technology, using the best-in-class technology, bringing an awesome consumer experience, customer experience, user experience. You can learn, you can discover, you can try, you can experiment, you can get better, and you can share, and you can become discovered on this platform. That's our goal, and we hope you guys will join us on this investing journey. Thank you very much, guys, and we'll talk to you again soon.